All right, everyone, a very warm greetings on behalf of Nursium Academy and NCM Investment, Kuwait, UAE, Jordan, Turkey, and Malaysia. So we are expanding very fast. I'm the presenter for today, and my name is Mahsin Khan. And in today's webinar, we are going to discuss our subject is actually how to profit from the volatility in the gold market. Now, officially, this webinar is for 30 minutes. But if you really want me to go in detail and try to help you out and try to make you understand some terminologies for your own benefit, we can stretch the webinar to 45 minutes or 1 hour. This depends totally on you. So in the chat box, let me know, do you want me to finish it in 30 minutes or you want me to take my time so that you can all understand? So can you please interact? And also please introduce yourself. What do you do, where you're from? Let's get to know each other. And how did you join this webinar? How did you hear about us? And what are your expectations? So let's get to know from which country are you attending this webinar and your name and what do you do? Thank you, Mr. Muhammad Shaukat. My webinars are mostly interactive. They are not only just theoretical. Of course, in today's presentation, the first 10 minutes are going to be theoretical because I have to introduce you to some basic terminologies. We may have people from different backgrounds, some have experience, some have an intermediate experience, some are beginners. So I have me as an instructor and trainer, I have to take everyone together in the same boat. So people who have already experienced, so you have to excuse me for the first 10 minutes or 15 minutes because I might introduce some beginners to new terminologies. Albert in Kuwait. Welcome, Mr. Albert. Mr. Abdullah. Welcome, Mr. Abdullah. Great. Muhammad Shaukat from UAE. That's great. Shariful Islam. Great. Thank you so much for the introduction. Thank you. See, maybe you can hear from my voice that I'm a bit sick. I have flu and fever, but it's totally fine. Okay. But I will just request that I will close my camera and we will switch to the PowerPoint presentations. So there's nothing to worry. I want everybody to relax. Wherever you are sitting right now, just let your back, stick your back with the chair and enjoy and relax, take notes. It's my job as a trainer and instructor to make things easy for you. Okay. So I'm going to share the screen. Just confirm with me. Can you see the PowerPoint? Is the PowerPoint visible to you? Great. Thank you so much. Great. Okay. So everybody can see the PowerPoint. So our topics formally today are, we're just going to talk about what is gold. Okay. What is gold spot? Why should someone trade in the precious metals, especially in the world of financial markets? What are the requirements for trading gold CFDs? Okay. And why you should trade with a fully licensed regulated firm, and how traders make decision on gold. These are our formal stuff, but I will cover some topics that are not part of the presentation. Now, today's webinar is more of a practical thing. You may need a MetaTrader 5 trading platform, and for that, you can go to our website, www.ncminvest.com. You can go here, ncminvest.com. Just open a demo account. After opening a demo account, you can download the trading platform. Just go open a demo account. And please just keep in mind, okay, to build a decent, successful, and profitable habit, whether it's in the world of online trading, in your personal career, or in personal life, it takes almost 90 days to practice and build discipline. Whatever we discuss today is only for information, educational, and demonstration purpose only. Whatever I teach you today, just learn on demo, take your time, relax, and whatever concepts you learn today, just try them on demo for some time until you feel confident. Then you could switch to the live trading account. All right. So just go here, enter your first name, last name, mobile number, country, and set your balance to $3,000. This is free money. You're not charged anything for it. subscribe to WhatsApp, submit, so that you're updated with all the upcoming events. Not only that, I would also request that you also join noorsiamacademy.com. Whatever future presentations, webinars, workshops, trainings we have in regards to financial trading, you can go to this website, just register here, and you'll be, always informed. Now, this is the MetaTrader 5 trading platform. Is there anybody who doesn't know how to use the MetaTrader 5 trading platform? Do we have anybody who does not know how to use the MetaTrader 5 trading platform? Okay, Muhammad Shaukat. Okay, you're new, right? No problem. Okay, great. We'll teach you some basic stuff. Let's go, first of all, to the presentation. We will just go through the slides for formality just quickly, and we'll go to the main topic, which is switching to the trading platform and discussing gold. Okay, first of all, gold. Okay, what is trading exactly? Trading is nothing more than act of buying and selling. It's a business. Online trading is just like an online business. Today, if you wanted to start a business, you need a physical location, you need recruitment, you need technology, you need products, you have to offer services, and there are huge costs to start a business physically anywhere in the world. And $50,000 is an amount. If you have access to this kind of money, you can start a business anywhere, whether it's in Asia, in America, in Middle East, this is the amount. But $50,000 is a really huge amount. And even if you have access to it, there's a huge effort behind saving this $50,000, right? Okay. And every business is doing nothing more than offering and bidding. They're just buying and selling goods and services. Online trading, all right, is also like an online business. Instead of buying and selling physical products, you are conducting trading activities with precious metals, with currencies, stocks, and shares of the companies. Okay, so one of the main financial markets after the forex and currency markets are the precious metals markets, where we trade gold, silver, platinum, palladium in some cases, and copper. Okay, so if you wanted to trade gold, and why do people trade gold? Because the reason being is it is one of the most fastest moving products. It goes 100, 200, 300 points up and down. If you don't know what is the point system, you don't know what is the point value, I will cover that for you. Gold is loved by many people. And when it comes to trading, gold is highly volatile. Gold is always going to be in demand because its quantity is rare globally, and gold has different utilities. It's used by people in form of jewelry. It's used in electronics technology. Not only that, different countries around the world, they try to save their secure their financial reserves in gold as well, so that their currencies can stay stronger. So one of the financial markets is the precious metals markets. We've talked about this already. Online trading is just like an online business, but you can start your online trading journey with only a decent computer. You don't need any expensive computer at all to begin, or you can even use a telephone to start your trading journey. Okay, who is the financial markets for? Before we go, I know everyone wants to know, get to the point. How does gold work? I want to know this. We will cover that. Okay, but bear with me just a bit in the beginning. First of all, trading in the financial markets is for individuals who prefer taking financial risks. And it is for people who are looking for additional source of income. Let's be very honest, open, and sincere here. If today I requested a 50 to 100 KD increment in my salary, wherever you are working, either it's me, you, or anybody else, it's quite difficult to get a 50, 100 KD raised, or 50, 100 KD is just like 500 to 1,000 dirhams, okay? It's quite difficult. Either there are logical reasons the company does not have enough budget to increase the salaries, or the company would do alternatively is increase 50 duties in your job description, so yourself you come into pressure and submit resignation and go away, right? So it's better to make your own income as a part-timer. So it's for people who are looking for additional sources of income. Online trading, the effort and time it requires from a trader is only 5 hours a week. I am very sure no one has ever told you this. Looking consistently at the chart every second, every minute, every hour is totally wrong. Professional traders know where they're entering, what's going to happen in the market, how far it can go against them, and how far it will go in their favor to give them profits. Although this is risky, so it's for people who are looking to generate additional sources of income. It requires 5 hours a week. I am very sure we all have same 24 hours. 1 hour a day is more than enough to continue trading. Okay, it requires low capital. If you have no experience, you don't know anything, you can start with a demo account, practice account, test account, in which the financial markets and charts are absolutely fine. They're exactly same as the real markets, only the money is fake, just like a monopoly game. You can use that money to trade, to get some idea, to get some experience. You must learn why you're entering and why you're exiting, and inshallah, I'm going to teach you that in today's webinar. It requires a very low capital. You can start, if you wanted to go for a real account, you can start for as low as $500 or $1,000. You know, businesses require huge capital. Here, you can start with only $500. Basic technology, a smartphone, palm phone, a normal computer. You don't need an expensive laptop or computer. A simple 30 KD, 40 KD laptop or 3,000 to 4,000 dirhams laptop is sufficient to start trading. Why computer is preferred? The reason being is there are more advanced and detailed features on the computer to analyze the chart, to look at the chart, to understand the price movement, to understand price behavior, you know. So that's why it's good to have a normal laptop. When you have experience with time, you can go to phone and a small working place in phone, in home. Set yourself, if you want to start your trading journey, set a corner in your home, put a small table, put a writing pad on it, put some nice keyboard and mouse and a screen on it. Treat it as your office. Okay. So enough talking. The spot gold price refers to the price at which gold may be bought or sold right now. Spot means instantly, right now. The spot gold price can refer to the current price of gold per ounce, gram, or kilo. Typically, however, spot gold is quoted in price per ounce. So what do I mean by here? First of all, let me tell you something. This is the MetaTrader 4 trading platform. Sorry, MetaTrader 5. MetaTrader 4 is discontinued. Okay. This is how the platform looks like. Very quickly. Okay. This session is being recorded, so you'll get the recording. So I will do it very fast. You can copy these steps later on. This box on the left is called Market Watch. Market Watch is a section in which all the trading products offered by the trading broker are available. Okay, here, this one. This is called the Market Watch. So I'm looking for gold. What I'm going to do here, I'm just going to go here, click on G couple of times, or I can scroll from here. Once I see the gold, I can open the chart. So do we have gold here? And if you cannot see gold, if you're seeing lesser trading products, you have to right click and click on show all. Okay, so it will show you all the trading products that are available by the financial broker. Anyway, I think the symbol for gold is XAUUSD. I already have this. Okay, so again, this is a market watch. This here is the market watch, where you can see the trading products and you can know what is the buying price and selling price. Whenever you go to a goldsmith and you want to exchange a ring, you want to buy a ring, or you have a small gold bar of 5 to 10 grams, you want to give it to the gold merchant. Let's say you bought it for $50. But when you return that, you make your decision that you don't want to keep it instantly, you know, in $50, this is the buying price of gold, okay, that you bought it. But if you want to sell it, maybe the gold merchant would say the selling price is $48. How come it was 50 and now you're telling it's 48? There is something called a spread. This is the commission. The difference between buying and selling price is called spread. If you want to write it down, go ahead. Okay. The difference between buying and selling price is called a spread. Well, financial brokerages, they are giving you technology, they are giving you the trading platform for free, they're offering you customer service, they're offering you instant deposits and withdrawals, they're taking care of your money. Okay. The good one of the good factors, okay, or good quality of choosing a financial brokerage is that whenever you open a trading account with any financial trading company, they must have segregated bank accounts. What are segregated bank accounts? That the client's money and the company's own funds, they are kept separately. Number two, a financial brokerage must be regulated by Capital Markets Authority of Kuwait mainly. Any company that is regulated, what does regulation mean? That there is a government entity within that country that audits and checks that financial brokerage, are they being sincere, honest with their customers, they are not manipulating, there are regular checks, there is follow up in regards to customer complaints. So having a regulator is much important. If you do not trade or open a trading account with any company that does not exist within your home country or neighboring country, and you don't know where the company is, and especially they are not regulated, your funds are not safe. NCM, NURSIM Academy is the academic and educational wing of NCM investment in Kuwait. We have even a physical office in UAE, Jordan, Egypt as well. Okay, so we are well regulated. Okay, and we make sure not only we protect, we keep your funds safe, we also provide trading education, so that we want clients to be successful and gain knowledge as much as they can by hosting free seminars, workshops multiple times. So we'll keep on talking. Now, let's go back here. You know now what is market watch. I've introduced you to the definition of spread. Now, this is called the navigator section. Navigator is a place in a trading platform, in a trading program, where you have available demo accounts and you have available real accounts. In today's webinar, I'm going to show you how to buy and sell, and we are going to talk about one of the trading strategies. Okay, so this here you have is called a navigator, and this here at the bottom is called the toolbox. It's also called the terminal, and it's called toolbox. What is a toolbox? It is an area where you have your balance, the amount of money that is available to trade. And if you take any trade on gold or forex or commodities or share or indices or energy markets like oil, all of those transactions, whether you're buying or short selling, they are going to appear here. Okay, and when you close with a profit or loss, losses are part of the game, but for successful traders, the end of month should be green. Okay, experienced and successful traders, their end of months or end of quarters are always green. Losses in business, profits and losses go hand in hand, but profits should be bigger than the losses. So this is the history. This is the trade panel. Now let me show you very quickly how you can hide these. I can go to view, market watch, view and market watch, it's disappeared. I can go to view and I can go to navigator, it's disappeared. When I go to view, I go to toolbox, okay, it's gone. Control M, N and T, this is how it comes. Okay, clear? This is an introduction to your company and platform. Please get to the subject, announce. Of course, see, thank you so much. What's your name? Sorry, I don't know what's your name exactly. We have to introduce the company and privileges also, because we want everyone to begin properly. You know, that's our reason. Okay. Now, let us set up the chart. This is the gold chart. I'm not going to teach you in detail how to interpret or read the chart, but I'm going to go and right click on the chart, go to properties, okay? Just when you watch this lecture again and you want to set up your trading platform, okay, just change the colors as per the color scheme that you see here, okay? And that's it for now. Now, this is a gold chart. We are using something called a Japanese candle chart. What is a Japanese candle chart? You know, it's just candles, and each candle has a duration. Each candle has a duration. If I'm using a daily candle chart, daily candle, the body of the candle, it shows me how much the price of an asset or gold move from point A to point B. That's what it shows me. If it's a daily chart, so daily chart means within the span of 24 hours, this was the length of the price movement. Red candles start from the bottom. The red candles, they start from the bottom. Okay, so sorry, from the top. I am sorry for that. Here, they start from the top, and the green candle, which indicates that the market is going towards the upside. Okay, green candles, they start from the bottom. I'm going to go in its anatomy later on, but let me now explain you how does the price of gold moves, okay, how to read the prices and point value. Okay, so if you see here, the current value of gold is 1935.68. Yeah, 1935.68. Let me write it down for you. 1935.68. Okay. Okay. Here, ignore the last digit after the decimal point. Okay. Ignore this. Do not count this one. Now we are going to read how to. Now we are going to learn how to read the prices of gold. After that, we'll talk about the lot sizes. Then we'll go straight into the strategy. Okay. So the price is 1935.6. This is how you should read it. 1935.6. This is how you should read. And how does the price of gold actually move? We'll go to the white screen. That's much better. I'm going to write it here for you. If the price of gold is 1930, we will not write the second digit. If it goes to 1930.1, this is a movement of 1 point. You shouldn't call it pip, because pip is actually for currency traders. It's used for currencies. This is 1 point. Okay. Now, if it goes from 1930.0 to 1930.5, this is 5 points. This is 5 points. If it goes now 1930.0 to 1931.0, this is 10 points. Okay. And if it goes to 1930, now the question is, what is the value of each point? The most important question for us to learn how to make money from gold is, what's the value of each point? So I'm going to come after I make this table. I would suggest that you do write this table down. I know the video is recorded and you'll get it, but it's better to write it. If you write it from your hand, you will feed it to your mind and you will remember it for later. This is 100 points. And from 1930.0 to 2030.0, this is 1,000 points. All right, everybody. Now, what is the point value? What is the point value? When you start any business, whether it's mobile phone shop or restaurant, whatever it is, the supplier is always going to ask you that you have to take a certain number of quantity. We call it volume as well, or some places it's called lots. The minimum quantity that you can trade with is called 0.01. This means it's called 1 micro lot. This is the quantity of gold that you can purchase. 0.01, it's called 1 micro lot. And if you're trading with 0.01 lot, each trade, each point on gold is equal to 10 cents per point. It is 10 cents per point. So let's start here. So if the gold price, it went from 1930 to 1930.1, you gain here 10 cents. Okay, you gain here 10 cents. I will tell you a trick. How much is the average price movement of gold? That will help you in taking trades. Even if you're wrong, you will know how to correct your mistake. If the gold price goes 10 points from 1930 to 1931, this is equal to $1. It will be $1. 10 cents into 10 points is $1. Same. If it goes 100 points, okay, it will be $10. And if it goes 1,000 points, it will be $100. Excuse me. Now, clear? Now we know what is a spread. We know the point value of gold. If it goes from 1930.0 to 1929.9, you lose $10. Opposite is also valid. If it goes from 1930.0 to 1929, you lose 10 points, which is $1. Okay. Now, what is a margin? Margin is amount of money. You can write this definition down if you wish. A margin is amount of money that is required to trade with 0.01 lot size. X lot size. Margin is amount of money that is required to trade with X lot size. So if you want to trade with 0.01 lot, you should have at least $10 maintained in your trading account. If you have $10, this allows you to trade with 0.01. If you wanted to trade with 0.02, you need $20. Okay. The margin that is required for gold is $10 to $20. You can contact the customer service or sales department to know what are the exact, because they keep on changing and fluctuating. Usually it's $10 to $20 only. Okay. So we understand now the point system. We understand the lot size, the minimum quantity that you can trade with. And if you want to trade with that minimum quantity, how much is the amount of balance that should be available in your trading account? Okay, is it clear so far? I hope I'm not fast, Is it clear, everybody? Are you understanding me? Is it easy? I'm trying to use least amount of technical language. Okay. Thank you, Mr. Muhammad. Thanks for confirming. What about others? What about others? Mr. Amir, Mr. Abdullah, Muhammad Rizwan, Raja Gupta, Mr. Saqib Saeed, Mr. Sharif al-Islam. Great, great. Okay, now, here's the trick. Here is the trick. Now we are going to start exploring and dissecting gold. Thank you, Mr. Muhammad Rizwan. Thank you so much, Mr. Sharif, Mr. Raja. Okay, team, just keep this thing in your mind. No matter what is your income level, no matter even if you have even high funds available to trade with, first, try to master trading with 0.01 lot size. Okay, I'm going to repeat this again. No one will teach this, and no one will ever say you in any webinar. Whatever your trading experience or capital is, start with 0.01 lot size, stick with it, specialize in it, master it. If you want to be a gold trader, stick with gold, specialize in gold. I cannot be engineer in the morning and doctor at night. I cannot be teacher in the morning and an executive at night. I'm not Batman. Okay, none of us is. So please, if you want to learn in gold, stay with gold, specialize in it, stick with it, spend some time, use only 0.01 lot size and understand the behavior. This is the first tip. First tip, stay on one product. Number two, stay with 0.01 lot size for quite long time. If you cannot trade 0.01, you cannot trade 0.02, you cannot trade 0.05. Okay. Number three, what is number three? You know, it went out of my mind. Okay, here. Now you should know, when you start trading and focusing on one trading product, you start to begin understand its personality. But the most important thing, if you ever wanted to learn how to trade with most simple way without going into technical details and fundamentals, you must know and understand what is the average price movement and point movement in gold. If you understand this, you can trade with ease. It will take time and practice. So again, I'm repeating it. You must know, learn, and try to understand what is the average price movement per day, per month, per quarter, per year. If you understand of any asset class, whether it's a stock, it's NASDAQ, it's Dow Jones, it's S&P 500, it's euro dollar, it's pound dollar, whatever it is, if you can analyze and understand how much is the daily, monthly, weekly, and annual pip movement, points movement, how much in a day it can go up or down, worst case scenario, okay, then you will be on the right path. And how do we do that? We do it like this. I'm going to switch here to the trading platform. Okay, this is the gold chart, right? We are watching at the daily chart. I want everybody now here to focus with me. Okay, everyone's here, everyone's focusing. Now we're going to get into serious stuff. Okay, if I click on the chart, I do control Y, the lines here, they disappear. If you're seeing a box like this on the chart, control G. Okay, this is control G. In the mobile phone, you can do it manually from the settings and color section. Control G and Y to make it disappear. All right, here on the top, we have here the crosshair. Okay, crosshair. You can use the center mouse click, the center wheel of the mouse, or you can even do control F to switch to the crosshair, or you can select manually here. Three ways are there. Okay, so now let's go and try to understand gold. When I see the chart right now, this is a daily chart, right? I can know, I press left click, I hold the left click and drag here. Left click and drag here. I stretch it. Okay, what information I am getting here? Okay, can you see here? It says one. Now I want you to see very carefully from the right hand side. It is showing that the gold fell from the high 20% in value. 20% in value in the duration of 168 days, because this is a daily chart. Each Japanese candle that you would see, I'm zoomed out right now, it is made of 24 hours, right? So 168 days, gold fell by 19.26%. And now in the center, where it says 39944 points, this is actually 3,994. Okay, do correct this. You remember, we removed the last digit. So it fell by 3,994 points. Okay. Now, what information does it give me? Now, okay, so I know it fell 19%. When I go here, I can see it fell by 12%. When I go here again 21%. So here, every drop I'm analyzing. Okay, each and every, can you hear any background noise? If you don't mind, can you just confirm with me if you're hearing any background noise? So what I'm actually doing here, I'm trying to understand the drops, how big these drops are. Okay, when the market starts falling, what's its limit? Do you know what information I'm getting from this? Very simple. From this exercise, I'm getting a grasp. If I entered in the market, how much by percentage the market can go against me and what I need to do. There is something important that you need to know. When you buy an asset or commodity or gold or currency, buying means that when the prices of that asset class goes up, you make money. This is what buying means, right? There is something called short selling. What is short selling? I will not go into its technical details. Short selling means you can make money when the market is going down. It is the opposite of buy. In short selling, you will make, let's say you're short selling here. If the price goes down, you'll make money. But if this was your entry, if it went up, you would lose money. How it works, it's not important today. It's for another day. Okay, so we are talking here about buying means you make money when the market goes up. You make selling short selling means you make money when the market goes down. In the trading platform, short sell is called a sell. Okay, and the markets will never shoot up or down straight. Markets always go in zigzags. The market doesn't go up like this, and the market won't come down like this. It will always and always go on zigzag. Even if you made a mistake, it will often give you a chance to amend that mistake. Okay. At the end of session, I will give everybody a chance to ask you their questions. You can ask your questions in the chat box, or you can come over the microphone and ask. All right. Now, thank you, Mr. Abdullah. Thanks for confirming. Now, let's go back to the chart. Let us suppose I have a demo account of $3,000. I have a demo account of $3,000, and this is how you trade. Okay. You would go on a new order. I think I'm not connected. Just give me a moment. We will start to place the orders. I'm going to show you something. Please bear with me. No, we'll open a new account. We'll go to File, Open an account. File, Open an account. Okay. Next, open a demo account to trade with virtual money. Test. I'll set amount to $3,000. I agree. Next. Okay. Now, okay, so we have the trading account with $3,000 of demo active. Now, don't follow me, don't copy me. We are just doing a test here. I'm going to go to new order. This is how you open a trade position. I'm going to go to new order. It says here gold. This is the lot size, volume 0.01. All right, here 0.01. Okay, now I wanna buy. I just hit the buy button. So I have a trade open with 0.01 lot size, and this is the price 1926.0. Where can I see my trade? I go to view, toolbox, or control T. This is my trade here. So here I can see it's 0.01 lot size. Okay, I've bought gold at 1926. Okay, and I didn't set any stop loss or take profit. I'm not going to talk about stop loss and take profit. Now, why are we discussing this? Just to know that if now a trade goes against me, if hell breaks, market crashes, something crazy happens, what will happen to my account? Let's say this is a strong support. What is the definition of support? You choose a horizontal drawing tool. Here, you can draw a line. Support is an area where buyers are strong, where the buyers push the markets towards the upside, and resistance is an area where buyers are weak, buyers are poor, sellers are there, short sellers are there. Resistance is an area where buyers take profit, they exit and they sell and dump all their gold position and go for the market reversal. So I bought gold here, and if the gold market, I press Alt and left mouse click, I can drag and drop here. I have a $3,000 account. Worst case scenario, if gold for me is that this is the final bottom, as per my personal opinion and trading analysis. If it goes here, this is nothing more than a loss of $330. $330, which is only 10% of the trading account, and this won't happen in one single day. Now what I can do, because I know that this is the important area, I can take some trades in advance. There are two kind of trading orders. Market orders means I want to buy or short sell right now at the current market price with the current market situation. And there's something called a pending order. Pending order is just like a zombie, it's there on your screen, it's there on your chart, but it's not active. When the price will come, it will touch it, then it will be activated. It's a discussion for another day. I would recommend, however, that you go to our YouTube channel, and we had a very nice session. The last session was amazing. We had a lot of people there. Just I'll share the link with you later. Just watch that webinar in English. Now, what I can do here. Now, I can know that if this is, I'm losing 10% of my account when the price goes here around this level. Now, I can place like few more orders in different places. I can make layers. I can create layers. Okay. And I know my limit, that even if I take one position is giving me a loss of 10%. So let's say I'm aggressive person, I will take a 50% risk. So I could probably take 5 positions even randomly without proper knowledge and strategy and still benefit, because two things are going to happen. When you trade the financial markets, they move in cycles. What I'm going to tell you right now, this is only available for, this talk is only applicable for major currency pairs and gold only, not others. Markets, they move in cycles. There's an up cycle, there's a down cycle. Okay, when the cycle went, but nobody knows. But there is always going to be a center of gravity, average price, central price, where the market, no matter, even if it goes up, it will always come back to that price, and even if it goes down, it will always come back to that price again. Excuse me. Okay, clear? So I can take random trades with proper risk management. This is what risk management and money management is, that you analyze in advance, you figure out in advance where is the worst case scenario where the market can go down or can go up. This is a resistance zones, the prices fall. What you do here, I can even execute a short selling trade. I can go at sell by market 0.01 lot size. I can short sell. So if the market goes down, I can still make from it. If it goes up, I would still make money from it. Now, here is the basic way of understanding the trading strategy. Okay, we have something called resistance, from where the prices go down. Okay, we have something called support. I hope we are not sleepy and getting lazy. Now we are going to get into action. This is support. This is support. What's gonna happen? Either, excuse me, here, if the market goes down into support, I buy and I sell, I close that buy in the resistance, right? In resistance, I short sell. I short sell to make money from the downward movement. I can take profits at the support. Now, of course, the market will not always do how we want. It's a 50-50 win-loss ratio. Okay, So let's say here I short sell, and the market, instead of falling down from here, it went up. So what I personally do, or I've seen professional traders do, is what they would do, they would hedge. They would trade in the opposite direction. What they would do is they have a short sell trade here, short sell trade, okay, and they have a buy trade at the top. Why? Because now with this, they have locked the profit. They have locked their profit and loss, whatever it is. They have locked the loss. And if the market goes up, okay, the buy that they have, this buy that they have, they can exit. They can exit at the next resistance, because markets are cyclical. Markets don't go forever up and they don't go forever down. So I've this way taken the profit on the buy trade. I exited this buy on the top. Let's say I made $30. I made $30 on the buy, but I'm losing maybe $35 on the trade that is at the bottom. Okay, I'm losing here on the trade at the bottom. So what I do, in the next resistance, I take a short sell trade again. I take a short sell trade again. And when this short sell trade, I have now two trades. The buy is gone because I took money on it, right? Khalas, the buy is gone. Now I have two short sells. I have two ways. I will let this last short sell from the top come down at this entry. When it falls, I will take profit. Okay, or I will let this come 50% down, and I can close this short sell trade with this short sell trade at break even with zero profit and zero loss, because I took the profit from the buy trade. Excuse me. So same goes for the support. Support example is easier to explain. Market comes down. What I do here, I take a buy trade. Okay, I take a buy trade here. Now what's going to happen? Now the market should go up, correct? Oops, here. It should go up. If it goes up, I make $30. I'll give you a rough example. I'm making $30. Okay, but what happens, instead of going up, the market went in the opposite direction. It continued to fell towards the downside. So I took a short sell trade here. I took a short sell trade, and I am making money from the short sell, but I'm losing money on the first buy trade because it's open and it's going against me. When the market enters the new support zone, I will buy again because I'm taking now profit. I will take the profit on this short sell trade. Oops. This is okay. Khalas, this is not erasing. We'll ignore it. Okay. So I take another buy trade here now. Now I take another buy trade. I already made money on the short sell trade. Now this buy, if it comes here in this near my first entry that I took, I make money and exit it. And even if it doesn't, it comes halfway through because I made $30 in short sell. If I'm making plus $15 and losing minus $15 on the last trade, I can close and exit. So this is a one quick strategy. I hope it was easy to understand. We'll go for one more method, one more technique to make it easy for you. And then we will start the question and answer session. How was it so far? I introduced you to the concept of support and resistance trading. I explained to you that the markets are cyclical. I introduced you to 0.01 lot size, why it is important to master the 0.01 lot size as a beginner. Then we talked about why you should focus on one trading product only. What's the importance of that? It will help you build discipline. It will keep you focused. You won't go crazy. You will know what are the market's limits. I taught you how to know if the market crashes or goes against you, what would be its maximum limit and which time frame, which chart you should use. Here it was the daily time frame. Okay, so please let me know. Do you want me to continue and give you one more technique and go for question and answers, or it's enough? Today is part one. Part two is next week on Wednesday in our physical premises. To be part two, to be part of the detailed workshop or to request even one-to-one sessions for free, it's required that you should be an active customer with NCM Investment to get further one-to-one or group tradings in our physical premises or even online. So one more technique. Okay, sure. No problem. All right, Mr. Abdullah, Mr. Muhammad Rizwan, no problem. Mr. Sharif Hassan. Okay, we're gonna go for one more technique. Now, this technique requires use of technical indicators. What's the definition of technical indicator? The difficult definition is a visual display of a mathematical formula. Here, let's clean the chart. Control B. I select everything and I just delete. Control B. Excuse me. Insert indicators trend. Insert indicators and trend. Then you select something called moving average. This is called a moving average. Okay. So here the value should be 30. It should be colored pink. Hit the OK button and you will see one line. This line, it is calculating the average price of 30 bars. Its value will change on the 1 hour chart because on 1 hour chart, it is calculating the average price of last 30 bars on daily, last 30 hours. On daily chart, it will calculate the price of last 30 days. On weekly chart, last 30 weeks. On monthly chart, it will calculate the price of last 30 months. Okay, now again, insert indicator one more time, trend, moving average 15. We'll color it yellow. This is the most easiest and simplest trading technique that will help you in successful hedging. The results are much better on 1 hour chart or 30-minute chart or a higher time frame. Do not try this at a 1 minute or 5 minute chart at all. Sometimes it takes days or weeks to generate the signal. The strategy and the technique is simple, very simple. Okay, here. Let me get the drawing tool. When the yellow line cuts above the pink line, number one, the yellow line must cut above the pink line. Number two, after cutting, after crossing, there should be some distance, some gaps between both the lines. When this distance is created, number three, the green candle that will form after the cross, after the cutting, that green line is your signal to buy or enter that trade, and you will hold that trade. You will buy and hold that trade until the opposite signal comes. You will see yellow now crossing below the pink line, making some gap. The red candle will be used to take a short sell entry. Before you were making money when the market was going up. Now you will make money when the market goes towards the downside. This is a very simple and easy trading technique and method to use. Okay. So this is the second method. Just back test it. Back testing means like zoom out. Okay. These are some important areas in the meta trading platform. This one's okay. Here, use these. If you want to go back in chart history, disable the auto scroll so that you can go back. Just back test it. Which chart looks good? Which chart is comfortable? You know, see, you buy here, you sell here. You buy here, you sell here. You know, all these crosses. All right. So let's get the drawing tools. I'll mark it for you as an example. This is one of the trading techniques that is used by global traders. This is the most simplest one. The beginners, they love it. Okay. You have a buy here. You have a short sell here. You have a buy here. And you have a buy here. So trading is a process. It is a journey. It is an adventure. It takes time. Just like in every company and career, it takes 2 to 5 years to become a supervisor, assistant manager, manager. Similarly, to become a professional trader, it takes time. It will take you 3 to 6 months. And if you're following the rules, the discipline, you're working on one strategy and focusing on it and improving it. Okay. It's a 3 to 6 months journey for a beginner, but it takes 2 to 5 years to be a professional full-time trader. Trading is always 5 hours a week, no matter how strong and professional you become. It is always going to be a part-time business. As a part-time business, it does have a potential, with risk of element, of course, to generate income as per full-time income as well. So that's it for today. Thank you so much for your participation. Thanks for bearing me, and my apologies in advance. I'm sick. I've got fever and flu, so maybe I was a bit distracted and in pain, but I did my best. And I feel fresh and happy when people come to learn and they stay and they will ask questions. Feel free to ask questions. No question is a small question. No question is a stupid question. No question is a crazy question. Every question is welcome, and I will answer all your questions. Whatever you want to ask, you can ask me in the chat box, or you can go to the reactions section and raise your hand. In the reactions section in Zoom, there's a raise hand option. Just raise your hand and I will unmute you so you can ask your question over the microphone. Okay. Mr. Abdullah, the MA colors are yellow and pink. Yellow for 30. Inshallah, by tomorrow evening, this webinar will be uploaded. So you'll be able to see there as well. Okay, yellow and pink. But let me just show you quickly our YouTube channel. Give me a moment, please. Excuse me. Okay, here. This is Noor CM Academy YouTube channel. Okay, here. You can always go here. We have a playlist here. You can just browse it. This is the playlist. And we do, okay, this is the webinar. This is the webinar that I recommend. I will share this link in the chat box. I'm giving you the link right now in the chat box. I would suggest that you watch this webinar later on. It has a lot of important information for you. Okay, so this is the webinar, and sometimes every Thursday we do market podcasts for Arabic and English speakers. Okay, we're working on it, and a lot of cool stuff are gonna come. Also, do watch this. The strategy, the technique that you learned today for support and resistance, this video is also good. Ranging market sideways FX pairs. Okay, so we've got iPhone here. All right, please go ahead and ask your question, but just for sake of reference, and just to tell us your name.
Yeah, hi, my name is Abdulaziz.
Welcome, Mr. Abdulaziz.
Yeah, my question is like how the hedge method is going to help us. Like, is it a good thing or bad thing in trading?
Okay, it's a double-edged sword. It's a very good thing and it is a very bad thing. Very bad thing for a trader who has no idea about how the market cycles work. Very good thing for a person who understands the market, who takes small lot sizes, and hedge helps people to even get out of the trades faster. Like I said, let me show you here. One of the best, in this video that I showed you here, in my opinion, these the market here, ranging market sideways FX pairs, these are good for hedging in my opinion. Okay, so here, let me give you an example. Let's say we go to Australian dollar. This is Australian dollar against the New Zealand dollar. Are you with me? Yeah, if you see very closely, we'll go to 1 hour chart to speed things up. Okay, see. This is my levels. Are you with me, Mr. Abdulaziz? Now you're also
I'm with you.
how to draw the reversal zones. I'm doing it very fast because we have limitation of time, but if you visit our place, I'll do it practically for you. Okay, here. Okay, now look, here is the thing. You remember what did I say? If at the support I buy and resistance I sell, right? But the market will not always do what I want, like I buy here, I sell here, and I short sell here, I exit here, right? Correct?
Yes.
Okay, now let's say here, look, here I was lucky. I short sell here, I take the profit, I buy in this box and I exit. When I go here, here is where the problem happens. I took a buy. Now you will learn how to fix a losing trade. Here I have a buy. Okay. Here
Okay.
I have a buy which failed. So what I did, I took a short sell. I hedged
Okay.
it. Okay. I hedged it. Why did I hedge it? Because my training experience and knowledge, it tells me that the markets are cyclical. They're always going to bounce off from a certain level, right? So this short sell, I take here. I exit at the next support. This is for me a support because the price is pumped from here, right? Can you see that? Hello, are you with me? Don't unmute yourself, please. Don't mute yourself, please. Okay, Mr. Abdulaziz, you're here?
Yeah, I'm here.
Okay, stay with me, please. Okay, so here, this is my support, and this also support area. I have two support areas. So anyway, what happens now? This short sell that's going here, I book
Okay.
the profit. I book the profit on short sell. Okay.
Mm-hmm.
Let's say I take $40, example, 40 or $50. I made $50, example. Okay.
Okay.
$50 is now booked. I have only the buy that is open here, right? This is the buy, correct?
True. Yes.
Because this is a support, I am taking another buy in this zone. I took another
Okay.
buy.
Mm-hmm.
Now, I took this buy. I'm losing on the first trade, but this trade, when it starts to go up, okay, it reaches 50%, halfway,
True. Yes.
halfway. It goes
Yes.
to the halfway. I can close both the trades with profit and loss. So sorry,
Yeah.
break even because I made money already, right?
True. Yeah. So it's
This
not going to give me profit or loss. It's going to close in the
break even.
zero.
And
Yes.
your account, because you already made money from the previous short sell trade.
Yes.
Now we'll make this example more horrible. Okay. You took a buy, then you took a buy around here. You took the second buy, but this
Mm-hmm.
also breaks. This also breaks. So you take two short sells maybe with some gap. If the market is going
Okay.
down, so definitely it should go down, right?
True.
Okay. Now, when the market it goes, these you're losing money here on this area, you're losing money on this, correct? But you
Okay.
made money on this short sell. You made $50 on that. You exited here, right? Okay.
Mm-hmm.
Same thing goes here for short selling. These two trades, you take profit, let's say $25 each. So 50 plus 25 plus 25, it's $100 you made from short selling, correct?
Yes.
Now, if you take another third buy, you take a third buy, okay?
Okay.
Now, the market, because we have a lot of gap, market doesn't go straight up and down. It takes time. And if you're trading with a small lot size, so now you have first trade here, it goes here at the center, little bit up. You can close all the three trades with break even.
True.
So this
It will be
requires
balanced.
experience, this requires some decent balance, and it requires staying with the minimum lot size. The problem is when people open a trading account, they take our trainings, they think with $100 they'll make 1 million the next 2 weeks. It's a process, it's a journey. It takes 3 to 5 years, 7 years of experience, but you can start making decent pocket money. You can make a decent part-time income as a beginner, but stick with small lot size. Because let's say you start with $2,000-3,000 only and you stick with one micro lot. What's going to happen in the next 3 months, 6 months? You will go through a lot of burst time and it will not hurt you, because you'll get an experience. Okay, I'm trading with small lot size because I'm using small quantity. When the market crashes, when people are crying and scared and fear, I'm relaxed and I keep on continuing my trading activities. You get my point?
Yeah. True. True.
So yeah, that's it. And any other questions? Anybody else has a question?
Thank you so much.
My pleasure. Happy to help. You're in Kuwait or UAE?
I'm located in Kuwait.
Okay, welcome. You can pass by if you wish. You've seen our office?
Yeah, it's in Dar Al Awadi, right?
Yes. The academy. You've seen the academy,
Perfect.
right?
Yes, I have seen it.
All right, great. Thank you, Mr. Abdulaziz.
Thank you.
You're welcome. All right, shall we end the session, or you have any further questions? Like I said, don't feel shy, don't feel hesitated at all. I love questions. If you have questions, it means you like the presenter. So was it easy? I try to keep it very basic and general. Okay, now here's the deal. Here's the deal. Condition number one. If you're not an existing customer, you don't have an active trading account. Okay. And you just open an account, you just activate it. I will teach you tricks and methodologies that you won't find anywhere on the internet. I have a very strong and massive experience when it comes to the world of financial markets. And, so this is an offer from Noorsim Academy. If you are an active customer, if you open a trading account during this week or next week, it's activated and funded with at least $500. I will teach you how to trade, and I'll teach you in a way that will make you an independent trader. Independent trader means that you will never ever need support or help from any YouTuber or any presenter or any other trainer. Yeah. Yes, Mr. Abdullah, I understand what you're saying, but unfortunately, easy talk, hell actions is only, you can say this to people who don't understand the industry and who don't know even how to train. Unfortunately, most of the trainers are good marketers and publicity makers. But I don't know, you can even meet me in person if you wish in our office to ask more. Okay. So thank you so much, everybody. Have a great evening. Thanks for bearing me. I hope you enjoyed today's video. Take care, good night, and see you next time. Subscribe to our YouTube and social media channels to be updated with all the upcoming webinars. And I'll see you soon. And yep, that's it. Bye bye for now.